Good afternoon, everyone, and welcome to Realise Business's Expert Webinar Series. Firstly, thank you for joining us today. My name is Jacqueline, and I'm the Brand and Marketing Manager at Realise Business. For those of you who aren't familiar with us, Realise Business is a leading social enterprise empowering people to successfully run a business. Through our webinars, we bring our advisors and members together to share their expert knowledge in the interest of helping each other to learn and grow to their highest potential. But today, one of our Realise Premium members, Amy Chen, will present the webinar, Making Debtor Management Easy. Just before I throw to Amy, I'm going to run through some quick housekeeping points for you. If you have any questions during the presentation, please type them into the question box. You can bring it up on the right-hand side of the screen by pushing on the chat icon at the bottom of the screen or by pressing Alt-H. I'll bring the questions up during the presentation at my discretion, or otherwise we'll have plenty of time for questions at the end. So now, without further ado, I'd like to formally introduce our expert presenter for you today, Amy Chen.
Thank you, Jacqueline, and thank you for everyone for joining us. As Jacqueline mentioned, I'm a premium, I'm one of the premium members for Realise Business, and I'll give you a quick run through of my background before we get started. So I've spent a long time working with small business, and I've also done a lot of debtor management in a couple of different capacities throughout my career. So in my very first job, I did the accounts for a very small not-for-profit, and chasing invoices was basically what I did for part of my job, and I've got to say it wasn't really my favorite thing to do at all. So for those of you who do have to chase up your clients for payment, I know exactly what it's like. I also spent over a decade in banking and financial services. So I mostly did cash flow and debtor finance back then. And I also managed a lot of clients that had these types of facilities. And what I also used to do was assess businesses to see how risky they were, to see whether a bank wanted to lend to them. And now I work as a consultant helping small business with cash flow and financial management, mostly because during my banking days, I saw lots and lots of business owners who were really good at what they did. They just needed understanding the numbers part of their business. Okay, so numbers are actually quite straightforward. It just needs to be in a language and a form that a person who's not a numbers person can understand. That's me there. And then just to get this out of the way, as with anything to do with accounts and finances, I just do need to say that what we're going to be talking about today is general in nature, and before you make any changes that affect your financial position, that you should get the right advice for your personal circumstances. Okay, so why should we care about managing debtors? So what studies have found is that more than 60% of businesses close down within 3 years, according to the ABS. More than half of them will fail because of poor cash flow, and that's based on ASIC statistics. 62% of businesses didn't believe they could survive more than 3 months if their invoices were unpaid, and that came from a Xero survey. And surveys have also shown that the longer you wait for payment, the less likely you're going to collect. So the latest statistics I found was that if you waited 6 months, you only have 51% of collecting on your accounts. So what do outstanding accounts cost you? It puts 35% of businesses at risk of insolvency. And the Xero survey found 78% of business owners. It caused 78% of business owners cash flow strain, and the late payments actually affected their mental well-being, as well as increased their stress and anxiety. It also does cost you real money. Now, there's a formula on the screen that works out what the monetary cost would be for you. But really, it's the sooner you're paid, the better off you are. So say we had an invoice outstanding for 100 days for $1,000, and the interest rate you're paying to the bank was 10%. that 100 days that's outstanding will cost you about $27, which doesn't seem so bad, until you get to the $100,000 mark. If you've got $100,000 outstanding, it's costing you close to, $3,000 having those accounts unpaid. So the sooner you collect them, the more money in your pocket, basically. And the other thing to remember is that that formula that calculates your outstanding costs doesn't include your admin time. So the older an invoice gets, the more cost intensive it becomes. So you're talking follow-up letters, phone calls, additional record keeping. If the invoices are still unpaid, it creates more cost if you decide to use a collection agency. Okay, so why do we need to care? Well, number one, cash is the lifeblood of your small business. And if you don't collect it, if you don't collect what you're owed, you'll go bust. So as we mentioned, 49% of businesses go bust because of poor cash flow. So basically cash is the very lifeblood of your business, and it's what keeps you going and it's what pays you. The longer you wait, the more it costs you. So there are holding costs, but there's also the cost of what the high stress levels do to you as an owner. The older the debt is, the harder it is to collect. Basically, your contacts could move on before paying your invoice. Things can get lost, clients can go bust. So again, the sooner you get paid, the more peace of mind you're going to have. So what can you do to make data management easier? So I've broken it down into a couple of things that you can start thinking about. Part one would be number two is creating a pre-sales checklist. So when you onboard a new client, there's a couple of things you can do to just reassure yourself that you will get paid at the end. Staying up to date with your industry, being consistent with your collections, and know when it's time to move on. So number one, creating structure. Now, the government inquiry into late payments found that most small businesses average less than 5 hours a week chasing accounts. And they also found that owners prioritize sending new invoices and growing their business before they even thought about chasing what was owed to them. And that's understandable because we have a lot to do. Our time is precious, but as the longer something drags on, the harder it is to collect on. So by being structured in a way that you manage your debtors means that your business will have a strong foundation to minimize loss as your business grows. The ability to do more with less because your processes will be more efficient, and converting sales into cash faster means you can release thousands of dollars into your cash flow. Okay, so how do you create structure? Well, the power of it really lies in embedding certain practices in your day-to-day. The time that you spend chasing late, the thing you can do is just start by looking at what you're doing. Ask yourself what your invoicing habits are. Do you forget to send your bills when you get busy? How often do you check when someone's paid? How do you know you're not doing more work for someone who still has an overdue amount? And what do you do to follow up payment? And then once you kind of get a picture of what you're currently doing, ask what you can do differently. So can you shorten your payment terms? Can you offer incentives for earlier upfront payment? Can you ask for deposits up front? Can you offer installment plans just to flatten out the cash flow and to take the peaks and troughs out of it? And can you start charging overdue fees? Yeah. And then once you get a picture of where you're at and where you'd like to be, you can set up a process that works for you. Now, I find the easiest way is to first up to set up a non-negotiable time each week to review your outstandings and to follow up payments. So treat it like a diary appointment, put it as a recurring appointment that happens, and then dedicate that hour to do nothing else but look at your debtors. And then, as I mentioned, whatever you put in place has to work for you, and what works for you could be different to someone else. So if it's only an hour that you can spare, that's better than nothing. make it the first thing that you do in a day so you can move on and do something that you actually like better, because no one really likes chasing debtors, let's face it. Um, so you're spending that hour solid on just collecting, working on what's outstanding to you is better than being constantly stressed or just thinking about working on your debtors and not doing anything at all. Okay, so just to give you a bit of an idea of what a process could possibly look like, I've got a sample on the screen, okay, and it's a sample only, give you ideas of what you can possibly do. After you said to make sure they're okay with everything. Did they receive the invoice? Is there anything outstanding that you need to do? Really treat it like relationship building. And it's actually it's a way to find out what your client's payment processes are, because often the person you deal with isn't the person that actually physically pays the bill. So use it as as a subtle way of finding out who the right person to follow up is if payment hasn't been made. Now, sometimes a couple of days before your invoice is due, 3 to 5 days, might be nice to send a polite email to the right person just to remind them that payment's coming up. Couple of days after it's due, email reminder, follow-up call, nice and polite. And then 7 days, 10 days, 14 days, you can kind of just structure it the way you feel is appropriate. Now, when you think about your processes in terms of what you want to do in terms of managing your debtors, I've got a couple of suggestions for you to think about. So now, number one is don't delay sending your bills out, because often paperwork is the one thing that gets forgotten when you're busy. Now, most business agrees that sending an invoice out quickly without mistakes does encourage faster payment. Make sure you pay your own suppliers. So not only does that incentivize you to chase your outstanding accounts, it also preserves your business reputation as a reliable customer that people want to do business with. Make it easy for your customers to pay. Now, most accounting systems will allow you to send invoices with a direct link to a payment portal. Include this link in your emails and your follow-ups. Allow credit card payments, even though there's merchant fees for smaller amounts, just purely to save you time and stress, and be ready to take these credit card details over the phone if you need to. Now, there's also lots of automated tools available. So if they work and they make your life easy, I think go for it. Most accounting systems will have automated reminders that you can switch on to let you know when something has been paid or becomes overdue. And there's apps like Collect More and Easy Debit Collection. Now, I haven't used these personally, so I can't attest to what they're like, but I have heard good things about them. Now, the other thing you can do is prepare your email and letter templates for your reminders and follow-ups. So you could look into whether you can automate this process to make it faster. Just if you do automate it, just make sure it's set up correctly so reminders get sent to the correct customers and you don't end up sending something to someone who always pays on time, because it doesn't look that great. Make sure you call your customers and follow up in writing. Now, there's a Harvard survey that shows in-person communication is 34 times more effective than just sending emails. But do follow up in writing, confirm it all in writing, just in case you need that written record in the future. Always be polite, and because sometimes there is a genuine misunderstanding. Like, invoices can end up in spam folders. Sometimes a client can honestly forget to pay, or they're waiting for you to send an updated invoice. Sometimes just checking in style email can easily sort everything out, and you'll stay on really good terms with your customer. Double check that you've done everything you're obligated to do. Check that you've sent the invoice, payment terms are clear, and your client's not waiting on you to correct something that, on a job that, may have been miscommunicated. Now, when you are chasing up payment, communicate your next actions really, really clearly. So before you start charging late payment fees, tell them when this is going to start you have a policy of sending out a formal letter of demand after X number of days, tell them the date you're going to send it. If you're going to send it to a collection agency or a small claims court, give them notice, because sometimes they might rectify the payment just to avoid your next action. And finally, just be firm and consistent. Do what you say you're going to do, and take the action that you're going to take. Keep a record and stay polite, even if you're frustrated, because what you want to do is keep your reputation intact. As I mentioned before, it's not unusual people forget. We all have lots of things to do. Companies experience staff turnover as well. Clients can go out of business, so it's in your interest to set aside time every week just to focus on following up who hasn't paid. And it also could save you from continuing to sell someone who's never going to pay you. Now, there's a couple of other tips, and I haven't got these on the slides. Now, when you speak to a client, try and get a committed date for payment, because people are more likely to deliver on a personal promise. Get your parent, when someone say they've paid you, ask for your payments to be verified, because most people are more than happy to tell you what you want to hear just to get you off the phone. But requesting proof of payment and asking evidence of payment means that they're less likely to lie to you. And then be open to negotiating a payment plan. It may well be the only way you're going to be paid. So get everything confirmed in writing, include the set amounts and dates to clear the outstanding debt. So that's a couple of things to think about for your processes. Yeah. So we'll move on to point number 2, which is new client checklists. So now we all get excited when we sign on a new client or we finalize a new contract, but you do need to formalize it. A handshake or a casual email might not protect you if there's a misunderstanding when something goes wrong. It could end up badly. At worst, it could end up in a lawsuit that wipes you out completely. So if it's appropriate, put an agreement in place. It creates a clear record of what your client's agreeing to, including your terms of payment and what happens if they're late. Like, say it gives you the right to withhold final deliverables, charge late payment penalties, or stop supply completely. Agreements also help if you need to go to a small claims court, or you need to use a collection agency to collect what you owed. Now, there's lots of templates available from small business support agencies in your region. And there's websites like Rocket Lawyer. But the important thing is, if you do use one of these documents, just get it checked by a lawyer, because sometimes different laws apply in different regions, and you want to make sure they suit your business and what you do. Now, point number 2, research your client. So consider doing a reference check. Some companies I know will run a credit check. Just bear in mind, some checks will need client consent, but sometimes even a Google search will tell you plenty. Yeah, so we used to do these at the banks all the time. We used to Google the borrowers, and it would tell us a fair bit. Now, for clients without a track record, consider taking payment up front. You could try a small trial project before going bigger, and then, or you can ask for 50% upfront and milestones at agreed times during the project. The things to pay attention to are comments when you're speaking to them, comments about having a limited budget, whether they seem disorganized or they constantly ask you about your rates. So some of those types of things tend to raise a few red flags. So just bear those in mind when you're bringing on a new client. Now, there is something called trade credit insurance. And it's an option if your contract is large enough to make you nervous about receiving payment, or you're laying out a lot of money to fulfill that contract. Now, these policies cover any losses if a client defaults or payment becomes defaults in their payment, or your client becomes insolvent. And they're really handy if you're dealing with offshore clients, because sometimes enforcing payments in a different jurisdiction can be really difficult. So the key thing with trade credit insurance is just check whether it's cost effective for you, because you need to pay a premium to get the product. And Final point on new client checklist is know when to say no. So in the early days of your business, if you're a bit cash strapped, you're more likely to take stuff on if it's more risk. But as your business matures, it might be in your interest to focus on high quality customers who will consistently and reliably pay you. Generally, 2 or 3 chances is enough. So if they fail to deliver on their word after that, ask yourself whether you have the resources to keep servicing a client that requires a high level of admin to extract payment. Sometimes you're actually better off without customers who constantly cause you problems. Yeah. Okay. Staying up to date. Now, staying up to date with your industries and what your customers are doing will help you get an insight into the direction your clients are going in, so you can adapt your business and stay relevant to their requirements. And the other thing it does is it allows you to identify clients that are starting to experience trading decline or financial stress, which gives you, and then that in turn gives you a chance to take proactive steps before it hurts your cash flow. Now, if you do have a client that starts experiencing financial stress, do show empathy, because we can very quickly find ourselves in the same position. Extend payment terms if you need to, as they're likely to be waiting on payments as well. But do remember that your priority is to make sure that your business survives. So if you do extend terms or agree to a payment schedule, just make sure there are firm dates and you get it all confirmed in writing. Point 4, being consistent with your accounts. So chasing accounts is uncomfortable for most of us at first, and some of us never get comfortable with it. But what it will become is easier and faster when you develop routine and habit. The other thing is your clients will realize you're true to your word, and you'll take the action you're going to take. None of us want to be that annoying person that's chasing payments, but basically you've done the work and you're entitled to be paid. If your client doesn't want to be hassled, then all they need to do is pay their bill. And the other thing is, don't concern yourself about losing business if a client isn't going to pay you, because arguably, we mentioned this, we touched on this earlier, arguably they're a customer that you don't want. As we've learned, the longer something's outstanding, the harder it is for you to get back. So it's in your interest to be consistent from the outset and to chase what's owed to you. Basically, you mean business and you're not going to go away. Which actually brings us to moving on when we need to. So things sometimes will get to a point where it's not worth your time and energy to keep chasing an outstanding amount. Now, collection agencies generally charge a percentage of what they collect for you, but it's still more than you've received if you didn't use them. Now, there's very strict guidelines of what debt collection practices are acceptable in the region that you're trading. So your local consumer affairs organisation, or sometimes the ACCC, can guide you on what's acceptable in your location. Now, if you do use a collection firm, just make sure you engage someone who's reputable and who's reputable, because sometimes if they use tactics on your behalf that are not a bit unsavory, they can reflect poorly on you and your business. Now, just because you engage a debt collection firm doesn't necessarily mean you're going to be paid, because there's still lots of loopholes in the process. And basically you can win a judgment against a non-paying client, and in the past, some clients who've had judgments in their favour they've still not been paid. And there's also some credit reporting companies that will allow you to report an unpaid amount against certain ABNs if their bills stay overdue. So that's something that to bear in mind in terms of things that you can do. Now, what are the key takeaways out of all of this? So cash is the oxygen that lets your business survive. It allows your business to live and breathe. Sales are critical, But the sales essentially mean nothing if you don't collect the cash that you're owed. Cash is what pays you, your workers, your rent, your expenses. And as we saw the statistics earlier, lack of cash is the main reason most businesses fail. Most businesses, according to that Zero survey, say that they'll go bust without if they're not paid for more than 3 months. So staying on top of your accounts is critical if you want your business to be around for the long term. Repetition leads to mastery. So the more you do something, the better you get at it, even if you hate it. The more consistent you are, the more your clients will realize that you're not going to go away, and there's only one way to stop the chasing, and that's to pay their bill. And the faster you catch on to an issue, the more likely you'll be able to resolve it before it becomes a real problem, which is why the repetition and the consistency is quite important. Now, yes, it feels uncomfortable for most of us to be chasing money that, that we're owed. But really, what's the alternative? Working hard and not being paid is no way to run a sustainable business for you. Okay, so point 3, make it easy. Make it easy for yourself, make it easy for your clients. Take advantage of the automated reminders that you can set up. Use templates. Set up payment gateways that make it easy for a client to pay. Give you and them no excuse not to do something because it takes too long or it's just too hard right now to do. Always be polite. Take the time to ensure that you've done everything that's required of you before you start throwing stones. Ask your client whether there's a problem on their end that you're not aware of. Sometimes misunderstandings happen and mistakes are made either by us or the client, and being polite in whatever the situation is the best way to keep your reputation intact. But always be firm and consistent, as I keep saying. Again, if someone wants us to stop chasing them, then they can cough up the cash or ask for an arrangement to be made. Know your customer. Know who you're selling to, know how they're trading, do your due diligence, ask for payment up front if you're not comfortable. Right, so again, it's your business. So now outstanding debtors is not just a small business problem. Even some of the largest ASX listed companies can struggle to collect on their debt. Now, I had one client that I worked with back when I was in institutional banking that was an ASX top 20. And they struggled to collect one of their major debtors to the point where if you looked at their financial reports and their annual reports, there'll be notes in the accounts. And when I went to the AGM, individual shareholders would be standing up asking about these outstandings, as well as the institutional investors. So again, you're not alone because no one finds this stuff easy. But by adjusting your process and changing the way that you manage your accounts can make you much more efficient and effective with your time. Running a small business is stressful enough as it is, but a structured collection process is one way that you can start taking back control of your business cash flow. By making your collection process more efficient, you can maximize how much cash you can maximize the collection of the cash that's owed to you while still having resources to continue sustainably growing your business. So what can you do? What can you do today, all right, to make this a little bit easier? So there's a couple of simple things that you can go for, really. So the first thing you can do is set up a recurring hour in your calendar once a week to review debtors. And if the two most important things to do in that hour is make sure your invoices have been sent out and call the clients that haven't been paid. So even if you just do those two things, it's better than not doing anything at all. You can also start building a library of emails and letters that you send out. So when you send a written follow-up asking for payment, keep it as a template to use later. It will make it quicker for you to send similar emails in the future. And if you need to, get these checked by a lawyer. And then stay up to date with your industry. Now, this could be as easy as just having a coffee with someone else who does something similar to you, or you can call one of your key clients and just see how they're finding things and what keeps them up at night. Ask them what their greatest opportunities are. So it not only allows, it not only does it forewarn you if there's an industry-wide issue that could lead to some stress for businesses in the industry of the customers that you deal with. Um, it also gives you a chance to think about how your business can help them out with the opportunities they see. And basically, most people like nothing more than talking about themselves and their business. So take it as a chance to be a sponge and just absorb the information that's out there. So those are small 3 things that you can do. Now, as a bit of a bonus, I do have these tip sheets on my website. So basically, I have a series of sort of downloadables on my website about it. One of them is about what we've talked about here, managing debtors, but I've got a few other ones as well. If you're interested, my contact details are on the screen. So just drop me a note and we'll send you, drop us a note actually, sorry, and then we'll send you a link to grab them. And there's some other articles and whatnot on my website about sort of making cash flow numbers easy. So if you're interested, again, jump on over and have a look. Now, final thoughts that I'll leave you with. Not everyone likes numbers, but it's an essential part of your business, and cash is the number one thing you need to survive. So basically think of it, it's your livelihood. No one's going to care about it no one's going to care about your business more than you do. And managing debtors is a key part of keeping your business ticking. Take action early. The sooner you tackle something, the more likely things will work out in your favor. And again, consistency brings mastery. The more you do something, the better and faster you're going to get at it. So, and that's it for debtor management. So there's a couple of more webinars that I've got lined up with Realise Business. So in February, what we're going to be looking at is preparing a small business loan. So I was preparing the slides for this a couple of days ago, and a Xero survey found that 76% of small business owners found getting a loan really stressful, and 80% found what lenders asked of them were too onerous, and 42% of us found the hardest part of getting a loan was getting the financial information together. Now, as I mentioned right at the top, I was a banker for a very long time, so I've seen it from both sides. So what we'll run through in next month's webinar is how to make the process less stressful for you. So I'll explain why a lender asked you for what they asked you, and we'll look into how you can make your business more bankable and choosing the right type of finance to suit what your requirements are, because sometimes a traditional bank loan might not necessarily be the thing that you actually need. In March, we'll look at making cash flow forecasting easy. So we'll run through a very basic cash flow forecast process. Every client I used to work with has these visions of a really complicated financial model, and they can be complex, but really forecasting cash doesn't need to be complicated. And as I mentioned, cash is the number one thing for business. If you plan your cash diligently and look what's ahead of you, you can do, that's the biggest thing that you can do to make sure your business stays sustainable and it's healthy. And April, we'll look into what is your credit score and why it matters. We do touch on it a bit in February's getting a business loan webinar, but credit scoring is one thing that lenders use a lot for small business, and it's actually been reasonably topical because it's actually the topic that I get asked most about in the media and get quoted on in the media. So we'll run through how to check your credit report, making sure it's correct, and what you can do to improve your credit score. So we'll throw to some questions now, I think, Jacqueline. So, but before we do, what I'm going to say is we've gone through lots and lots of information here. So even if you think of questions later on, do jot them down and we'll get you an answer. So yeah.
Excellent. Thank you so much, Amy. And that was a really interesting webinar, and very in depth as well. So thank you for that. Thank you for all those excellent tips, because I think everyone here today will definitely take a few things away with them that they'll be able to apply to their debtor management in their business. So I'm just now going to ask the audience to type in some questions if you haven't already. So just take a moment, and I think it's a great opportunity to quiz Amy on her knowledge while we have her here. So just remember, type your questions into the chat box on the right-hand side. So we've already had a couple of questions come through. So we've got one from Renata, which is, first up, Amy, what were the two, you mentioned a couple of programs that we could use for collections more, and something else. Renata just wanted those details again. And Renata, just so you know, we will also be sending a recording out for everyone on the webinar today, so you can go through this again tomorrow when that comes through.
I think the one, it's easy collect more off the top of my head, like easy as in EZI collect more.
Right.
I'll scroll back and I'll come back. I'll definitely confirm that.
And we might send them out on the follow-up email as well.
Yeah, just
for everyone.
bear in mind, I've heard positive things. I haven't used them myself. Our Easy Debt Collection, that's what it's called, EZI Debt Collection and Collect More.
Thanks, Amy. And then we have also another question from Renata, which is, what other bank loans are available other than the traditional bank loans? Are there different bank loans for business?
We'll touch on this next month in next month's webinar, but there's all, I mean, like, you know, if you look at things like leases, finance and operating leases are different forms of finance. You can do shorter term, sort of more liquidity management ones like overdrafts, and sometimes a business credit card is enough to manage month-to-month fluctuations. Traditional bank loans are usually good for longer term debt, but something that's very liquid and readily available and easier to get, generally higher in interest and harder, sort of easier to set up, more access to, usually are smaller amounts and higher interest rates. So it's a bit of a balance between the cost of your debt and how convenient it is. There's other things like vendor finance, invoice discounting is another product that's available. But again, it just depends on what your businesses are, what assets you've got in your business, and some types of finance are more administrative burden to a business ongoing. Certainly when I worked for invoice discounting, there was lots of monthly requirements for just to draw down. There were locked accounts. So it depends on how low touch you want it to be, and what the needs and what assets you're prepared to pledge to the bank, and then basically how much you want to pay for that debt. So yeah, there's a whole raft of things that come into there's as many bank products as there is banks, really.
Thanks, Amy. And one here from Felicia as well. Do you recommend outsourcing your debt collection?
You can outsource anything you want to, really. It depends on how much control you want. But I mean, in the early days, I think it might not be financially viable for you to pay someone to do it for you. So it's weighing up whether you want to pay away money in order to collect money. And the other thing you want to think about is you want the right person handling things for you, because if you end up someone who's going to be very heavy-handed with your customers, you could end up losing them as a long-term customer and end up having your reputation damaged. So just make sure, if you do decide to outsource it, make sure you're comfortable with the process they use. You're comfortable with the person, you're comfortable in which the tone in which your collections are going to be handled. Because again, it's ultimately all of these dealings are going to be reflect on you and your business. And the other thing, and once you establish a process, that's the other thing. Once you establish the process and document it, um, you can hand it to someone else to do in your absence without disrupting your business. So yes, certainly you can outsource it. It's just making sure you're comfortable with the person you outsource to and the processes they use.
Excellent. And I guess on that note, what happens when your debt collection gets out of control if you're not managing it properly?
Uh, yeah. Now, the worst that'll happen is that you don't collect any money at all from that particular debt and that you'll write it off completely. Um, Now, I mean, like I can relate to this actually because in my first job out of university, um, as I mentioned, one of my responsibilities was to manage the outstanding accounts, and being 22, new job, first job, didn't do a very good job of it. So basically, what happens? It spirals very quickly out of control. The one customer that sort of sticks in mind is that they um, they purchase services of about $5,000 a month, and I let it slip for a couple of months, and they didn't pay for a couple of months, and it just what was normally a $5,000 debt became about 45, and it's incredibly hard to claw back because they suddenly got to a point where they're like, oh, we owe $45,000, and we're like, oh, blimey, they owe us $45,000, and to work through an arrangement to pay back that amount of money took a really long time, and I ended up needing to get my CEO involved because, like, basically I wasn't senior enough to try and sort this stuff out, and there's a whole relationship management aspect of it as well, like how do you keep this client happy but have them pay us still. So it was an amount the company I worked for at the time couldn't afford to write off, and it did, I've got to say, it did get pretty ugly. They ended up having their access to facilities blocked and all of that type of stuff. So the lesson from that is that you need to stay on top of it all the time. If you come to an arrangement, make sure all the amounts that the installment amounts and the dates are very clear. You need to hold them accountable for it. And then take action if something doesn't happen, because at least then they know you're serious. Because I think being young, chasing accounts, I didn't have a lot of credibility in these debtors' eyes. So they thought, oh yeah, whatever this one young girl wants to do. Um, so again, be consistent, stay on top of it, be firm, but be polite. And that way it's sort of, it's ultimately, if someone's not going to pay you, they're not going to pay you. It's just how much resources you want to put into that. But you do want to put your best foot forwards, and be firm from the outset so people know that you mean business and that you're serious.
Yeah, I think there's definitely a fine line between managing your relationships and then ensuring that your debts get paid on time as well, isn't it? There's a
Yeah,
a
totally.
kind of balance there.
Yeah,
Um,
totally.
and
It's
on
you
that,
want to
yes. So
no, you want to maintain them as a customer, but you still want to be paid. So you want to be nice, but you want to be firm. It's a really difficult balance.
yeah. And I guess on that, if you were looking at changing something like your payment policies, how would you recommend doing that without making your customers unhappy in the process of change?
Well, there's a couple of ways that you can do it. If you want to start shortening your payment terms, try and do it incrementally, um, and give your clients lots and lots of notice, just to make sure they don't suddenly go from 30-day terms to 14, because that literally halves the amount of time that they have to pay. If you rein it in gradually, people won't notice as much. Um, just I would say do it slowly, and do it gradually, and give people lots of notice and give them a bit of flexibility at the start, even if they're good payers. So if they're like a day or two late, just gentle reminders saying, oh, we've changed our payment dates. It's actually due a bit sooner. So give them a little bit more latitude. Um, if it's a really important client of yours, negotiate, and they're a big client of yours, negotiate with them and find something that works for both of you, because it's this push pull sort of relationship, really. Like, they want as long to pay as they can get, and you want the payment sooner. So yeah, it's negotiate something that's going to work for both of you. The other thing to bear in mind is that your client is also probably waiting on payment as well. So you can't sort of rein it into the point where they haven't been paid, but they have to pay you. So there's a lot of cash flow management that they would need to, there's a lot of cash flow planning that they would need to do if you suddenly slammed your payments down. Um, Another alternative is that you can keep your existing clients in the same terms, and the new payment policies will apply to new clients because they won't know any different. Those are your terms, that's it. Might be a bit difficult to police from the outset because you've got clients on two different sets of terms. So that's something also to bear in mind.
Right. And I think this is our last question that we have here at the moment. If anyone else has some questions, just type them in quickly, or probably we'll wrap it up after this. We've just got one from Renata, which Renata asks, what about when it comes to home loans for people running small businesses? Because that seems to be quite difficult.
In terms of getting a home loan for a small business,
Yeah.
getting a home loan as a small business
Yeah,
owner.
I think that's where she's.
Look, retail banking is not something I did. What I can tell you, what I can say is, what the lender would be looking at is your consistency of income and how certain they're going to be that you're going to generate income to be able to service your mortgage. Now, not so much with home loans, but I do know that with credit cards, you need to have been in business for 3 years. Once you pass, generally 3 years, that might have changed. Once you pass the magical 3-year mark at one point, bang, you can get a credit card. Otherwise, you'd be declined before that. So you need a history of earnings, in terms of you need a history of financial statements to demonstrate your business earns money and therefore you earn money. The other thing to think about is maybe a lot of small business owners I know end up going with alternative lenders, and I'm not sure who they are. Not so much the people, but the lenders. But sometimes you end up paying more for your home loan because the banks see you as a high risk. And that's just one of the things that we have to deal with as small business owners.
Yeah. Excellent. Thanks, Amy, and some really good questions and answers there as well. So I think we've covered all of the questions. Amy, is there anything else you would like to add before we move on to what's up next?
No, as I said, there's a lot of information that we went through today. And sometimes it takes a little bit of time for that information to process. So if something crops up in the next couple of days, shoot us a message and we'll get back to you as best we can.
Fabulous, thank you. And we will, when we send out our thank you email, we will also put in the links we'll put in Amy's details if you'd like to contact her, and we'll put in the links to Amy's upcoming webinars that she mentioned earlier in her presentation. Just before we finish up, I'd like to just quickly mention some upcoming events that we have and webinars that might be of interest. So we've got, first up this year in January, we've got our Mastermind Experience Night, which is happening on Tuesday, the 28th of January in the city. I welcome you to register for that if that's something you're interested in. Mastermind is like our mini board that we create of other small business owners, and there's a facilitator who's also a coach that's there to support and kind of guide you through the sessions while supporting each other. It's definitely of value and something that we get really good feedback on. So if you were interested in just going along to hear about it and to maybe see it in action a little bit, on Tuesday the 28th of January. We've also got some workshops coming up. So we've got Your Online Brand on the 30th of January and a Start a Business workshop on the 5th of February. If you've already started a business, you might know somebody who is thinking about starting a business, and it's definitely worthwhile attending those. And then I won't go into all of the details. You can see them there on the screen. We've got quite a few social media workshops and digital storytelling workshops coming up in the next couple of months, and Pub Biz, which launches in February. So we've got Cronulla Friday the 7th of February, Surrey Hills Pub Biz Wednesday the 12th of February, and Manly Pub Biz on Thursday the 20th of February. Feel free to register for that. You don't have to be a member to attend. You get to attend 2 pub business per year for free, regardless. So it's worth coming along and networking and meeting other small business owners, and hopefully building your own referral network there. So log on to our website and have a look at our events for the next couple of months, and try to make the most of it. And we also have quite a few webinars coming up, and as I said, that we'll send you those links separately if webinars are your primary interest. So also make sure you follow us on social media. That's where you're really going to find out everything that we're doing, and we do a lot for free, just to empower small business owners in Sydney. That's our main end game, and we are a not-for-profit. So follow us on Facebook, on LinkedIn or Instagram. We'll let you know about events and anything that we have in terms of education for you that could be either online or face-to-face. So follow us on social. That's where you're going to hear about it first. So thank you everyone for joining us today. I really appreciate you being here. And I look forward to seeing you all online for our next webinar, which is preparing for your small business loan on the 11th of February. And once again, thank you so much, Amy, for being so generous with your time and expertise to help the people that have joined us today. So thank you for joining us, Amy.